There's news why we're addressing the sector because India's sugar production has dipped by about 54% on a year-on-year basis in the month of November. So let's try and understand whether or not this dip in production is going to impact prices. Let's take stock of the sugar crushing, the produce that sugar mills are, suspecting this year, and of course assessing the health of the sugar sector overall, along with the ethanol blending in fuel. Who better than Abinash Verma, DG at ISMA, and Vivek Saraogi, the MD at Balrampur Chini Mills, joining in on the show right now. Gentlemen, morning. Good to have you on the show. Abinash, let me start off the discussion with you first. What do you make of this production drop, and what's really causing it, and how do you think it's going to impact prices?
I think the production drop is on expected lines. We all know that last year there was a major drought in Maharashtra and northern part of Karnataka, and therefore ISMA has already dropped its estimates as compared to last year and last year when we produced 32 million and 33 million. ISMA is expecting the production in the current season at 26 million. And because of lower availability of sugar cane in Maharashtra and North Karnataka, the sugar mills there have started late, and therefore you see the current year's production trailing by almost 54% as compared to last year. But as Maharashtra mills have started crushing now, that gap will narrow down, but we are certainly expecting that the production is going to be significantly lower than last year. That is number one. Number two, as regards the sugar prices, domestic sugar prices, we don't expect the sugar prices this year to run away because the production has fallen, because the carryover stocks from the previous season is very high, historically the highest at 14.5 million tons, and therefore there is enough availability of sugar in the country. Thirdly, it's very important to realize that the global prices have started moving up. That is because Brazilian production has stopped. The world is looking at Indian sugar, and therefore to attract Indian sugar, the world prices have started moving up. So there might be a small impact of the world global prices moving up on the domestic Indian prices also.
Vivek, hi, morning. Let me get you in on the discussion as well. We've got a fair color of how this, production dip does impact the industry. But how is it that it's going to affect you at Balrampur?
So as Avinash ji said, we are not expecting any runaway prices. However, we are expecting stable prices. The opening stock was 14 million, let's say, and assume you produce 260 and you consume around about the same level, and if you're able to export out of the 6 million, 5 million or 4 million, so basically you could be with an opening stock next year of 10 million. Now 10 million is a lot of sugar. However, it's a lot less than 140, which is 14 million, sorry. So your bias is a little positive. The sentimental impact of that is a little positive, but prices would remain in a range which they have played out.
Okay, fair enough then. Vivek, tell us how much inventory you're currently sitting on?
I don't have the exact figures. We did give the inventory as when we declared our results, but maybe, we had 49 lakh bags on 1st of October, but don't hold me to that. I don't exactly remember it right now. But yes, all mills are sitting with a huge amount of inventory. The good part is government reimburses you the carrying cost for a lot of that in form of buffer stock. The bank rates for companies like us is very benign. Commercial paper for us is available at around about 6% at today's markets. So if you're required to carry a little more inventory to get a higher pricing or a more reasonable pricing in the open market, so be it. It's not a bad idea at all.
Vivek, what's your view on the demand-supply mismatch that we're seeing in the system? Your view on sugar prices in the medium term. How do you see these factors at play moving, in the near term?
So as we have told you, and the inventory is there, so because of a minimum selling price, I don't see that being breached. Hence, this 32 levels right now is about 32, 32.5. it goes up to 34. So the average expectation is around 32.5, 33. The government gradually has been helping us, and there is going to be export, there's going to be diversion to B heavy. I would assume if this policy continues, and which in all likelihood it should, in the next 2 to 3 years we should hopefully be on even keel.
Abinash, what is your own sense on the inventory that the system is sitting on and how this demand-supply gap is going to really pan out?
See, as Vivek ji correctly mentioned, because of a very high opening stocks and a very balanced demand supply this year, we are producing 26 million and 26 million is going to be consumed domestically. We are actually going to reduce the opening stocks from 14.5 million to 9 or 10 million tons, depending on how much we export. Secondly, very importantly, the ethanol blending program is shaping up very well. And therefore, as compared to last year when we probably diverted slightly less than 500,000 ton of sugar into ethanol, this year it might be slightly more at about 850,000 tons diverted into ethanol. With more and more investments happening into the ethanol sector, more and more capacity is getting developed. In the next couple of years, we personally expect that from about 850,000 tons of diversion into ethanol, we should be moving to 1.5–2 million tons of sugar getting reduced because of the ethanol blending program. So over the next couple of years, next year also, we have seen that the rainfall has been good in Maharashtra and North Karnataka, which are bringing the farmers back into sugar cane. So next year we should be back to our normal production, whether it's going to be 29, 30, 31 million tons. We'll have to wait and see how much of sowing happens. But next year is going to be normal production. But very importantly, the ethanol program will help us balance some of the surplus sugar in the country.
What about ethanol blending? How is that panning out, Abinash? And you think that can surely address the surplus issue as well, if there were to be a case like that?
Yes, I've always been saying that thanks to the support from the Government of India, very, very positive on all fronts. And the response from the industry has been brilliant. So I would say the ethanol blending program in the country is moving brilliantly. One of the best programs I would say in the country today. And it will help us balance the surplus sugar cane production. There's too much of sugar cane because sugar cane is giving the best return to the farmers today. And therefore, we don't expect that the sugar cane production is going to drop very soon. We are going to be net surplus sugar producer. So this ethanol program will give us the opportunity to divert some extra sugar cane juice and B-heavy molasses into ethanol production, thereby reducing our surplus sugar production. As I mentioned, in the next couple of years, we should be reaching 10% blending with petrol in the country, reducing 10% of the petrol consumption, which is a huge, I would say, contribution from the sugar industry to the country, as well as reduce our surplus sugar by a couple of million tons.
Okay. Let's talk about some of the other businesses as well, Vivek. The other segments, the non-sugar side, what's the outlook there?
So as Abinash told you, the distillery segment hence is going to perform exceedingly well. The B-heavy price has been raised this year. C-heavy is at a reasonable level. And I fully ditto the concept that this is one of the best programs. So our distillery division should do extremely well. We are commencing in Balrampur our Guleria distillery on the 1st of January. That's on stream and should get into commercial production a couple of days earlier only. So we look forward with a lot of optimism with that segment. The power segment in UP, as briefed in the last, after the quarterly results, the government of UP has reduced the tariff. We are up in court against them. We are, in our view, have a very strong case, and hopefully things should, power tariff, the 2 rupees reduction we've already faced. I don't think that is here to stay. We hopefully look at some kind of a favorable judgment. But that is a caveat. I don't know what the courts will decide.
Vivek, help us understand then, how is it that you see profitability of the sector actually increasing?
So I cannot comment on the sector. All I can comment is on our company. So our volumes have been good. I think our recoveries are doing very well. We've begun the season. Our distillery volumes should, we would be selling more than 14 crores probably alcohol this year. And sugar, as you know, state government has not yet declared the prices. Hopefully the state SAP announcement should come very soon. One does not see any variation in that. So all in all, in Balrampur, with our balance sheet and our interest rates and our segmental performance with distillery enhancement, we look forward optimistically.
Abinash as well as Vivek, good to have you both on the show today. And, needless to say that the prospects of sugar stocks as well have been pretty bright of late. In fact, that's been the case for the last 1 year as well. If I just were to bring up the stocks of Balrampur Chini and how it's panned out in the last 1 year or so, the Nifty, yes, is flat today. But some of these sugar stocks have had a fair amount of run up, and they've had a very, very good show. There you go. A 59% surge is what Balrampur has seen.